Alrighty, we're back. I'm going to title this video, Not So Murky Anymore. Not So Murky Anymore. In our last video, we talked about not really knowing where the market was going and just kind of being in the middle of nowhere. And it's not really, the odds weren't good to go long, to go short. To me, I couldn't figure out what I wanted to do. And at those moments, I believe a good trader just admits it and sits back and waits for things to get less murky. It's awesome if you map out, as we did in the last video, what would it take to get less murky so that you can have something concrete to move on, and maybe you're not preemptively moving, or maybe perhaps the thing that would make it less murky actually happens, and then if you're not ready for that, you'll miss the next move. The unmurkiness will come and it'll be clear, but you wouldn't have been ready. So mapping out when you don't know what you wish would happen in order to resolve the murkiness is a great strategy, and I advocate it greatly. I use it greatly. It also allows me to take a rest and take a break. And in light of how waves are formed, there is a place in the wave for that. It happens every time. It's right after a large 5 wave has taken off and begins to retrace. There's a point where you're not sure, is the trend going to continue or is a new trend beginning? And you can look for things as the wave begins to break down in order to determine, are we going to start going again, or are we going to break down, even further? So that's really where we are. In our last video, we had this chart up, and just to review slightly, the darker lines are the lines that we believe have the highest probability. The medium term probability, and a thin one is things that we think are pretty distant. So it doesn't really matter which one happens. If you label them correctly or not, it doesn't really matter. But it does get you to go through the exercise of seeing, what might happen and what might make things more clear. So one of my theses was that we're heading back toward this reflection box down here, which has a bottom around 7,100, has a top or a minimum drawback of 98.20. So we've already achieved the 98.20 target. Now we're just wanting to know, are we going to continue further? And I believe that we are. And that's where I'd rather put, my money. And so I want things to happen that make trades possible on that side of the coin. So I'm not ready to be doing a bunch of long buying. There was an opportunity to do some long buying here, and that's where we thought we wanted to be buying. And I tried, and some of the other traders tried, and it got murky, and we got stopped out, and it just got messy, and we're right in the middle. So it didn't work out very well. We were wanting this nice crisp rally from here. We didn't get it. Kept dipping lower and taking out some pretty key support lines. And so the taking out of those support lines removed the awesome rally that could have been off the table and exchanged it for this more muted rally that may occur. And that muted rally is really not enough to take the risk on of buying long and trying to accumulate along the center line here, up near the $10,000 price. When you're above 10,000, things are, perhaps psychologically and technically more likely to continue to rally. When you are below and seeing prices below 10,000, there is no way that is bullish. That is never going to be bullish. You could be building something that becomes bullish, but that's never good. Murray math will dictate to you the frame lines, and being below the frame line is never good. So it's not value below the frame line. You're not, buying something on the cheap, which is what a lot of people think. They like it above the frame line. I might advise they buy above the frame line. The frame line here was 10,000. And, they see 9,000 or 9.7 or 9.5, and they think, well, that's great. He was recommending it at 10. I got it at 9.8, and that's just not how it works. That would be a fundamental, exactly backwards understanding of what is value. So value is all the way down to 10,000, and then becomes, it becomes exemplary that it isn't worth 10,000 as it goes below it. So You can't see that as value. You may get some dead cat bounces, but we can see here clearly didn't hold 10,000 the first time down. Definitely didn't hold it the second time down. And the third time, I mean, it didn't even bounce. It just gave way. So overall, this is not healthy. We do have Elliott wave structural support here at 9,100. This teal line, but that's underneath the center channel. I mean, that's not good. I mean, it's great here, and it's weaker here. But if we come back this way, it's not even going to be there. It's no longer going to be support. Whatever support this thing had, this teal line, the Elliott wave structural support. Let's take a look at why am I even talking about this. So at Elliott wave, you can't have any overlapping waves. So if you're still moving in with the trend, you cannot have any overlapping waves. So let's talk about what that is. That's here. Okay, so this line did not get overlap. This wave here came down, tested it. This is HFT doing exactly what it does. It fakes people out, but basically you can forget that and say this is non-overlapping waves. The second attempt to create non-overlapping waves would be here. So you can see there's no overlap here. So that's a continuing bullish rally. After this set of building waves, we were here. This is where we were. So we have to stay above it. And that's exactly what's been happening. That is the exact position that we're in the market, is testing to see if, as Elliott wave would dictate, we're going to have an overlapping wave or a non-overlapping wave. The minute we break through 9137, you can just take this to the bank. You can just continue to short and short heavily. Just short and short heavily. If you see prices at 9136, just dump it all in and go short. And cover immediately after you've made however much money you're going to make off a very short trip. It could be to the 50 line. It could be to this line. It could be down here. It's not going to be a very long trip. This would be an amazingly long trip, and you could do this. But I'm talking go big here. Go big, and you'll be fine and get out soon. And the trip is short, and the money will be large. But we're holding up this support so far. The next time down, I don't think we'll be so lucky. I do anticipate a next time down. It may be after this rally. It may be down here, but I do anticipate that this will yield. And when it does, go ahead and sell short with momentum. Let's go ahead and map that out so we can say we said it. We said it. There it is, 9137. Well, you know what I mean. It's colored up, and there we go. So right now this basically serves as the stop loss for any longs, but we're not recommending longs. So, if you're long, be long. Sell somewhere over here and make sure that you sell and get out way before you start getting under here, because you're kind of guaranteed to see a pretty precipitous drop after you lose 9133. Why will it be precipitous? Because a lot of people are Elliotticians and they know what the lack of that overlapping wave means. That does not mean that there can't be another rally here, but what it really means is there probably won't be another high. There probably won't be another high. Not before when we come back to retest the breakout of this line. And we're not here on talking about the breakout of this line. This was a thesis that I discussed about a month ago. Of course, it's always on the radar, but unless it's right around the corner, it's just a bunch of speculation as to whether or not we'll see it. But the particle line here is at 522. Well, it's more like 5150. 5150, map that out as well. And we're going to make this the biggest line on the chart. It is the actual biggest line on the chart, but it's so far away. What the hell? It's so far away, just so many scenarios that could happen before this plays. But, every once in a while I'm going to keep bringing this back up because it's a line and it's out there. And, if we had a hell of a crash, this would be where you'd want to be buying. So mentally be ready. It's a ways away. It's like halving BTC. So it's quite a ways away. But if BTC were to get halved and you were to see 5159, buy everything. Sell the house, get a mortgage, sell your car. You can buy it right back a few weeks later. Buy everything at 5159 if you see it. Probably, maybe you won't see it. Who knows? Anyway, so that's the lower absolute boundary. Between now and then, we're looking to curl around this reflection line, putting 7213 as the lowest, probable or possible lowest target of the next sell-off that will produce a nice gentle pickup. And because we haven't been able to hold this 10K line, and because we're even coming down here to do this retest, more than likely we also won't be able to make the first attempt break past 13.8. We probably won't even be able to make the first attempt past 12.5. And so we might be destined to see this just gigantically sleepy wave for 6 months or something. And that's, kind of more along the lines of what I'm forecasting is a very, I don't want to call it sleepy. I mean, this is 7,000 to 14,000. That's halving and doubling BTC. That is not sleepy. But for the people who are thinking, we're going right to 20,000 and then 30 and then 50 and 100, I'm with you on we're going to get there someday, but breaking down below 9137 will put a large dent on the speed in which our fantastically bullish numbers may arrive. But again, way far out there. We'll talk about that more when we're there. Right now, what we have in front of us is the following. We were hoping that the market would begin to rally so we could take some shorts. We discussed how it would be nice to take shorts around 10.7, around 10.5. I mean, anywhere around here is pretty good. We're basically going to be trying to short prior to getting a break above the last previous high. The last previous high is up here. It's almost at 11,250. Also happens to be the top of the frame. However, we have this descending downward slope, and the descending downward slope will probably cap all of the rally. So if we were to rally tomorrow, we could get up here. Unlikely. If we rally over the next couple of weeks, then we'll find ourselves running up against this downward slope line, which will probably force us back down and then continue the very move that I'm looking for here at the moment. We also can find a quick way down. It could be tomorrow. This basically could shift, to there. So many different ways it could shift. But in any case, either a little bit of a rally and short, or start shorting now as we climb and let this load up, your positions. This is basically about 700, 800 points. Create a ladder up here. Pick some key points. I think I started shorting here. I'm already short. I'm shorted, I think right around here, 10,001. Let's look. I'm short 10,087. So, around here somewhere. And it's, my first little volley. If this releases down, I'll take profits. I expect that it, might release and I'll take profits, and then it might build some. And if it builds higher, I'll take more, and I'll just be choppy, shorting and covering all through here. Once we get below the center blue line, I'll stop covering it and I'll hold it. But right now, we're not. We're above. We're above the center line of the upward, blue trend channel here. So just, no need to make the trade any harder than it is. I'll make profits every time it comes down here, and I'll short it as it starts to climb. And if I ever get caught in a slightly bad situation, I'm just going to deploy twice as much money up here as I did down here. And I'll move the center of my dollar cost averaging, way up. I'll probably end up, around 10.3. And, it might be a little bit of pain here and there, and wait for the big flush. So that's the scenario here. We're going to look at this a little bit closer, start to zoom in. Going to re-highlight again that in time our target is way out there, September 26th, October 1st, something like this, way out there. So we've got a lot of just downward headwinds, not a huge, massive sell-off, not a big crash, just some headwinds. So shorting is what I like. So today we got some rising prices, got us above 10,000. I know we just said that was a bullish sign, but it's also great to short above the short-lived above 10,000 plays. You can see already we're at 99.20, so I don't know, we're 200 points or so below this afternoon's high. So let's take a good look. Let's get in a little bit closer. Here we are, just same general chart with a lot less going on. Center, some targets. There we go. Let's tighten up a little bit. Here we go. So in today's rally, I'm going to zoom out for just a second to get everybody's bearings, but here we are moving down. Here we are attempting to make the rally. There's a bunch of cross supports. Long time support for the upward trend was broken here, but then it was regained. So that's technically actually a bullish thing. You lose the line, but then regain it. If you dip back below it, not good. Probably like a nail in the coffin type situation. But right now we're right at it. So maybe it'll rally. Maybe I'll have to short some more here. Maybe it'll break down. I'm going with the math that says it'll probably break down, and I'm going to cover somewhere over here. So anyway, here we are. We got the rally we wanted so that we could set up some shorts using 10,000 as our first trigger area. And then, of course, we're going to use some of these previous particle lines that have been built up here. Another one at 10,286. We also have the center channel middle support here, or resistance. So lots of confluence here, lots of nice places to short, anywhere along this area. So that's what I'm doing. If we tighten up on this a little bit tighter, and I'm going tighter because there's more clarity. The move we hope was happening is happening, so we're good to go. I also want to point out particle line trap, super 10th degree black belt stuff here, but we had this green particle line that was ejected from the last downward move. And right now, this actually holds the low. So this low did not exceed the old low. So this channel currently is the downward channel that is of strongest influence. And it had a particle line that was ejected here. And from the downward slope, it had another particle line here. And the two create this little area that I like to call electron capture. And that's what this is here. So we had the rally right into electron capture area. The electron capture is what happens when two different particles that are like electrons get ejected from the previous downward trend channel. And so they create this kind of no man's land where you can see the market, stays above it as much as it can, stays below it, is repelled. And so it creates this, little invisible area right here, perfect line. I usually don't draw this line. I'm going to go ahead and draw it now because the actual location of that line isn't where something is. It's sort of the lack of something, and it may sound confusing. I'll have to explain it some other day. Today it's not important. But this is that solid line. This is the line that the market is trying to figure out what is going on. So that's why we're shorting here. But you won't really see this in my chart because it's not a line. There's nothing there. It's the absence of things, and that's why I can't pull up or push down. In any case, this is the line. If we get back above this will be absolute clarity that we'll have continuation, and we'll probably move through this center line and move higher to these other targets that we were saying we would also short. But here's where we are. We've got a particle line that was ejected here. So this will be my cover area. So for my next trade, I'm looking to cover around 9.6. Maybe I'll cover earlier because I like profits. I like to take them, fast. Get rid of this here real quick. There we go. Let's get this white and thin it up just a little bit. So let's tag this. All right, so I'm short to 96.50 or so. So what is that? Pick it up, 350, 450 points or something like that. Nice trade, big deal, couple of percents. Every day, happy way to make some money and not have to take too much risk. I may cover a little bit early because I do feel like we should have some more rallies up through here, so I don't want to miss any opportunities. If I'm still if I'm still short and it starts to move up, missed opportunity. I know it's not going to just crater and start falling now, so I'm going to get some trades in here. But anyway, that's what we're looking for. We were looking for overnight trading to bring us lower. Somewhere in the overnight trading, early morning, it'll pick us back up. I'll start entering the exact same trade. Maybe we'll do a little sideways action. Maybe we'll go a little bit higher. I kind of really hope that that's what happens because I'm set up for that. So I'm hoping that's what happens. If it careens on me and starts tanking, which is sort of unlikely at this point because we still have to go through this particle line, here's what we will see. So take this to the bank as well. If we come down here and bounce off here the first time, but actually slip through it, that'll be hint number one. Then we'll bounce back up and actually get caught back up behind the particle line here that is at about 922. And then we'll begin to sort of oscillate around the particle line. So we'll have another attempt back here to break out, but the oscillation around the particle line will pretty much let you know that maybe something a little bit more sinister is afoot. So this would be red. Here, it's not red. It's red. This would be red. This would be medium probable. And what is more probable is to come down here, not break through it, or maybe break through it the first time. Second time, maybe strengthen up considerably, and then come back and retest the old highs, and then get inside this particle ejection area, and then pick up some more shorting over here. We'll call this slightly more possible, but not a lot, just a little bit. Oh, I kind of messed up my waveform here because there's actually a very large possibility once we get up here that we do not pass go. We do not collect $200. So this is actually secondarily or primarily possible or probable. Secondarily would be up to get up above here. So there we are. We're looking at what we're expecting. Be short. Sorry, too late for you if you didn't get on this. Be short. Cover here. Don't go long. Wait till you're back up here. Take some shorts. If you break above the downward trend line here, you probably can just hang in there. I probably wouldn't get like freaked out, but you might get quite a large rapid rally to the top part of this frame, and those prices will include, set this up here, boom, prices could include things as high as 11.8. Much more probable is that they stop below 10.9. And then the sweet spot to definitely be shorting is the middle of the frame, and that's 10.6. So all over here is a really great short. If you want to be super patient and wait for this and pull the trigger here, might do pretty well there if you're a little bit more of a slower paced home gamer. So anyway, lots of lines, lots of crazy stuff to look at. I think that's about it for tonight. We'll see what happens. Hopefully the short will keep working out. I do want to zoom in one time because the short is working. This is what happens in the ultra high speed trading world. I don't know anybody, really anybody. I don't know a single actual live human who is trading this fast. I map it, I chart it, I trade it this fast, but come on, people, who else is out there? Someone make some comments. Who wants to make super lightning fast trades? So here we are, upper Brent channel. Here are the 3 targets that exist out in time. I believe the one we're heading to next is this one here, and will hold up by 9749. Here is some other support lines, and we look to be hitting here and then coming back up for some more shorting. So anyway, good luck. Hope that helps. And yeah, glad to have a little bit more clarity.